everyone, and welcome to StockCharts, your Daily 5. My name is Mish Schneider, Chief Strategist of Market Gauge, and I am so thrilled to be talking to you today, especially as we're ending a very tumultuous first quarter of 2023. So essentially, I think the biggest theme to think about right now, as we are entering the end of this quarter, is this 23-month moving average. And I've written lots of daily blogs on it that I post on Twitter. StockCharts also posts, so you can go back and take a look. And as we're ending the quarter, this 23-month moving average is really a 2-year business cycle. And in general, and this is important to understand because everything happens so much faster today than it used to, but there's usually 4 distinct phases in a business cycle. There's the period of expansion, then when things peak, then when the economy goes into a contraction, and then a trough, which is obviously sort of a doomsday type of feeling. And so when we're looking at those 4, that usually take about 5 years. I'm thinking, was COVID the first trough? Did we have that expansion coming out of COVID in 2021? Did we peak in January 22 before the Fed got aggressive? And then once again, when we saw those lows in October 2022, was that another trough? So here we are, if we go back from the last trough in 2020, or 2021 when we peaked, here we are in 2023, almost 2 years later. Are we entering a period of expansion? So we're going to show some of those 23 months in the SPY, in the SMH, because there's 2 different pictures. But I also cannot go through this without talking a little bit about commodities, which I'm very focused on, the gold to silver ratio, the Euro USD, and then we will have 3 quick picks to take a look at. So let's get started. Okay. So I want to start with this SPY SMH because there are 2 very, very different pictures here. And this is that 23-month moving average I was telling you about, or about a 2-year business cycle. And here we are again in the SPY, looking at the same moving average. And of course, the 80-month moving average that you see below is still in a high bullish phase in terms of the fact that it's sloping up and it looks like it's holding. There were a couple of instruments, which I may sneak one in, that actually tested that 80-month, which would put us more in a recession if we broke. But instead, we can see the difference is we're in this very stubborn trading range in SPY, which means at this point, there's no expansion, there's no recession. What we have is something in the middle called stagnation. However, when you look at tech, and particularly as in the eyes of the semiconductors, we're breaking the 23-month, which means that the tech area is not only been rallying and leading the market up, but it also might be showing signs of an expansion, which could mean even if the rest of the market stays stagnant, this can continue to go higher. Or if we break down under this 23-month, obviously that would not be good for the whole market. But if we continue to go up in tech and we can't really get much momentum going in SPY, Qs, IWM, retail, etc., then essentially what we'll see at some point is that the semiconductors will turn around and go, whoa, where's the rest of the economic family, and start actually breaking down. And when I said I wanted to show you something quickly before we moved on, it's really the IWM chart here, because IWM really has a much narrower gap between the 23-month and the 80-month, which tells me that this is really still unclear on what exactly our next cycle is going to be. Will it be expansion? Will it be more stagnation? Or will we actually go into further contraction? So now I think as we've looked at the equities market, and we can see that we're in this stagnating area in terms of the S&P 500, potential expansion area in tech, and we're still not really sure where everything is going to go. There's another factor here to look at, and that is inflation, which many believe has peaked. Many believe we're going into deflation, but not me. I think we're going to be heading into a super cycle of commodities. And one of the key indicators to watch here is how the silver is performing relative to the gold. Now, silver has 2 purposes. It's an industrial metal, so it's going to measure a little bit of demand, but it also is a hedge against inflation, which we have not really seen in any kind of great play since the late 70s. And what's so interesting is if we look at the daily chart here on the silver versus the gold, we can see that this is outperforming the gold, which means we're getting into a little resistance here. It could stop. We have PCE numbers coming. But if it doesn't stop, and if we take any kind of cue from Germany that just had its CPIs increasing, showing consumer prices have actually gone higher, or Europe and the UK, which just showed fruit prices are close to 18% higher, then this will be in a trend that the equities markets do not want to see. So keep your eyes here. I love the silver market. We do have resistance up here at the February highs we have to get through. Obviously, if we can get any kind of dip closer to 2045, that would probably be a really good buy signal. But more importantly right now is if you really want to get long equities and you want to stay long and not experience FOMO and some kind of a shocker when the Fed starts to raise rates again, even though everybody thinks they're going to pause, watch this silver to gold ratio. And the next thing I want to show you here is the euro to the dollar, because there's a lot of talk about the devaluation of the dollar. There's a lot of talk about the Saudis and China starting to price oil in yuan and not necessarily in the dollar. And this is a good chart to look at to see what the dollar is doing relative to the euro, because right now you can see the euro is still outperforming in that this is over the 50-day moving average. It's in a bullish phase. I think we can forget and actually get rid of later on. So don't even look at this gold, because this is irrelevant right here. Essentially, what we want to look at is this one, which is how is the real motion, the momentum acting in the euro. So you can see all signals are firing here. We're over the 50, we're over the 200. We have the Bollinger Band here, which could act as resistance, just like we have the Bollinger Band here at 109 that could act as resistance. But if the euro to the dollar changes and this goes over 109, that means that the euro is actually gaining on the dollar, and that too will be a factor in commodities. Okay, so now let's switch here to a couple of the picks with the time we have left. And the only thing I'm going to do here in terms of the leadership is I'm going to change, instead of gold, we're going to make it SPY, because that's the general benchmark we're going to use to look at different charts. So the first one is in the actual semiconductor space, and it's gotten really sexy lately. This is actually Intel. And there's been a lot of positive news about Intel, including a lot of chip production in the US. So right now you can see, if we just look at pure phases, Intel went from a bearish phase to a recuperation phase. And I had started talking about it around 28 when it was breaking out into a recuperation phase. But it really didn't do much until yesterday, that would be Wednesday, when it broke out of the 200. And you see we're getting some follow through. And you can see now it's starting to outperform the SPY, not surprising, right after we looked at those 23-month charts. And look at the momentum, it's just flying here. So right now, Intel, I wouldn't necessarily be a chaser. I'm not a person that likes to chase, but we can go back a little bit and see, and particularly if we go back to a weekly chart here, we can see now that you're going right into resistance at around 32.50. So that would be the key area to break, or a move back down closer to 29, 28.50. But right here in between, wait for that breakout, because if it takes out on a weekly close 32.50, there's no reason why this can't go up about another $7 or figure somewhere close to around 40. So not a bad move for an active trader. The next one is more, I've talked about this one before. It's Tencent Music. I believe that streaming live music globally, this is a China stock, but also in China is going to become even more and more of a trend as we go forward. Now look at this one. This really basically did not very much for this whole long period of time. It's just been going sideways. But what interests me about it is that this was the day when you had the bad news on PDD earnings, Pinduoduo, but it recovered very quickly. And now here we are back above all this price movement we've done throughout the month of March. And we've cleared the 50 and we've confirmed. And this is outperforming the SPY. So the one caveat here is momentum. We need to see continued momentum in this over the 50-day moving average. And if so, I see no reason why, with a pretty tight risk down to under 8 at this point, we couldn't see this take out these highs. And if we go to a weekly chart just to get some kind of history on this chart, this was up at $31 in 2021. So you want to talk about an expansion here. This is an area and a relatively cheap stop with a good risk point that can give you that type of expansion. And the last chart we're going to look at today is more in the defense sector, and actually in the same state as StockCharts in Washington. So is Boeing. Now, there's been a lot of talk about Lockheed Martin, a lot of talk about Northrop, and I've pointed out Northrop before, but it's really underperforming relative to Boeing. And this has actually been one of our holdings in one of our quant models as well. And we can see that if we look here just at the daily chart performance, it's still been underperforming the SPY, so that looks like it could take that out soon. What I like about this chart is that we're very, very close to breaking out over that 50-day moving average. So if we do, and this overtakes leadership against the SPY, and the momentum can get back over that 50-day moving average, that's sort of like a trifecta win, and it would give you a very tight risk in Boeing. If you're more of a swing trader, probably under 192. If you're more of an active trader, a move, let's say, under 202 or 200, to see if this can go for a further leg in Boeing. And if we just get some history on here, we can see that Boeing was up to $450 way back in 2019. And we certainly have somewhat of a, let's say, risky, dicey geopolitical situation that could drive this stock much higher. So that's it for now. Thank you so much for watching. I hope that gave you a little bit of a backdrop to look for, but also some stock picks that could go counter to whatever the macro trend turns out to be. Bye for now. Thank you so much.